Thank you for joining us. Welcome to Business Incorporated. I'm Chimezie Obi Iwagu. Today on the show, World Bank cuts growth forecast for sub-Saharan Africa. Growing debt pile and weakening currency slows Zambia's economic growth. Plus, drought seen dragging Kenya's 2019 economic growth down. We'll start off the show with the markets, and here on the African continent, most of the markets were in negative at intraday, with both the NSE and the EGX30 in Egypt were down 0.29%, while the JSE index was in the green territory, up 0.24% at intraday, with Kenya closed negative on Monday. And in the Middle East, the Dubai stock market rose for a ninth straight session today, as most of its financial shares rose, while other major Gulf markets inched up. The Dubai index was up 0.17%, with Dubai Islamic Bank adding 0.4%, and its largest lender, Emirates NBD, rising 0.4%. The Abu Dhabi index edged up 0.1%, with Abu Dhabi Islamic Bank climbing 1% and National Bank of Fujairah jumping 11.9%. Saudi Arabia's index inched up 0.6%, with National Commercial Bank adding 1.2%. The Qatari index slipped 0.9%, weighed down by Commercial Bank, which was down 1.7%. And in Europe, stocks lacked a firm direction in the morning as market participants responded to a new tariff threat from the United States government. Well, let's look at some of those and more coming from the European space with my colleague in Frankfurt, Conrad Bussen. Hello, Conrad. Nice to see you again.
Good afternoon, Jimmy. Great to see you and great to be back on Channels TV.
Good afternoon, Conrad. Well, the U.S. has threatened to impose tariffs of up to $11.2 billion on a host of European products in response to subsidies received by European aircraft maker Airbus. What's the market response, and who's right and who's wrong here?
Well, Airbus shares are down, but not very much, I have to say. Both sides, both Boeing and Airbus in the past have broken international rules. That's what the WTO said. Both airplane makers have been heavily subsidized over many, many decades. And, you know, both have not been very eager to always implement the WTO regulations immediately after those regulations have come out. What's changing now is really that one side is changing the game, and that's the administration in Washington. Robert Lighthizer, the trade representative by the US President Donald Trump, by mixing up the topic, the dispute about Boeing and Airbus with this general trade agenda that's about, you know, the trade balance, that's about tariffs, etc. By mixing up those two, things are becoming much more difficult to negotiate, and that's why a majority of people here on the trading floors are convinced that the Americans are more wrong in comparison to the Europeans, because it's not a good idea to mix all those questions up. That doesn't make it easier to negotiate them.
Now, it's very likely that trade will be a major topic in Brussels today, where China's premier is the guest of the EU Council and the EU Commission, an important meeting there for the markets, I guess.
Well, yes, it's very important for the markets because it has the potential to, you know, be good for sentiment and stabilize sentiment somewhat, because next to this summit between the Chinese premier and the presidents of the EU Council and the EU Commission in Brussels, what's happening at the very same time is a huge travel activity by the UK's Prime Minister Theresa May. This morning, she traveled to Berlin to talk to Chancellor Merkel. This afternoon, she's expected in Paris to talk to President Macron, and later today, she's expected back in London to negotiate again with the leader of the opposition, Jeremy Corbyn. This very hectical travel schedule for Theresa May indicates how hectical, how nervous things have become, and of course, how unresolved. So, of course, in this situation, every little sign of hope from Brussels that, that there's a common approach of the important players in the world is positive for the markets.
All right, let's see what's happening in Italy. Italian Finance Ministry is expected to release its updated fiscal plans on Wednesday, which some analysts say will trigger another dispute with the EU over Italy's budget deficit. Give us a sense of how the Italian financial markets, from bonds to stocks, are taking this tense situation.
They're playing it pretty cool, Jimmy. If we look at the bond markets, the spread between Italian government bonds and German government bonds, it's significantly smaller at the moment than 6 months ago. On the stock markets in Milan, the stock index there, the MIB, has gained around about 6% over the course of the last 6 months, while here in Germany, our German index DAX is currently trading slightly lower than 6 months ago. These numbers clearly indicate that most market participants are cool about the consequences, the political consequences for Italy. Yes, it is, of course, also here widely expected that the Italians and the EU officials in Brussels will continue their dispute over debt. But the consequences of this for Rome, for the government in Italy, will likely not be very harsh and very negative and strong. And I can give you 2 reasons for this. Number one, of course, Brexit. And the second one is the elections to the European Parliament at the end of May. It's very likely that because of Brexit and before the elections, the EU officials in Brussels, the Commission, is not likely to do anything to give support to the Eurosceptical, right-wing populist movements in the European Union. So it's likely that they will leave Italy alone, despite, of course, the expected negative rhetoric.
Well, we'll wait till Wednesday to see what the plan turns out to be. Thank you very much for your time, Conrad, and enjoy the rest of the day.